Hey guys, Justin here. Welcome back to the channel. So in my opinion, the electric car revolution has officially began. Tesla this past week surpassed Toyota to become the world's most valuable car maker. And even though Tesla might be the biggest EV manufacturer, doesn't mean they are the only one out there you can invest in. So in this video, I will be talking about two small stocks that are technically so small they are considered micro-cap stocks. But nonetheless, both of these electric car companies are trying to capitalize on the electrification trend happening right now. So we will be looking closely at each company's strategy to see if they can grow into a billion-dollar company and if either stock is a buy right now. Also, these stocks were brought to my attention by subscribers that watch this channel, so thank you to those of you who commented and suggested these stocks. And if you are watching right now and you have stocks that you would like my opinion on, just drop a comment below and I will let you know what I think. But before I get into the video, make sure you destroy that subscribe button if you are not already subscribed. And don't worry, I'll tell you later in the video to hit the like button, so you can either do that now or wait until later in the video. One of the hardest things about investing, but also the most exciting, is getting in on a good growth stock early. But this is really hard to do, especially when it comes to electric car stocks, because it seems like as soon as you discover a new EV stock, the price has already tripled in the past week. And even though these two stocks are both up over 150% in just 1 month, I don't think a lot of investors know about them, and so they present good opportunities to still get in early. Now this video will be pretty high level, and I won't go too much into the financials of each of these companies because they are very small. Both companies have market caps close to 200 million. So at the end of the day, both of these stocks are speculative investments, which, like I have said in some of my other videos, means there is a high risk of losing your money. So unless you are a Wall Street bets type of investor, I don't recommend putting in more than 1% of your portfolio into these stocks. And I guess if you are feeling risky, you could up it to 2%, but really it's your life, so you need to make this decision for yourself. The first company I want to talk about is Electromechanica, ticker symbol SOLO. Electromechanica has 3 products listed on their website, including the company's flagship car, the Solo. Then you also have the Tofino and the E-Roadster. But only the Solo is being manufactured right now, so that is the product we will focus on. The Solo is a tri-wheel single-seat EV that is targeting people who commute to and from work on a daily basis. And the company's website claims that of the 119 million people who commute to and from work each day, 105 million of them drive alone. Therefore, the Solo was designed to be a highway-capable vehicle with a top speed of 80 miles per hour and a 0 to 60 acceleration time of 10 seconds. Now, the range is only 100 miles, but I think this was done on purpose since it is a small car and it is not intended to be taken on long road trips. According to financial statements, pre-orders for the Solo EV were an impressive 64,379 as of March 31st of last year, with most of those orders coming from customers in California, Washington, and Oregon, which makes sense given that most of Tesla's sales come from states on the West Coast as well. And despite the headwinds from the coronavirus, CEO Paul Rivera says that the company remains on target to start deliveries in the second half of 2020. So a lot of positive news from the company, but here's my opinion. My first impression of the Solo EV was that it was really small and honestly looks kind of weird. For example, if you look at it from the front, it looks pretty normal, but from the side, it makes you wonder, where's the rest of it? And the size could be a potential problem because over the past few years, the trend in the automotive industry has been towards bigger, not smaller personal vehicles. And really, it is kind of a safety issue nowadays to drive too small of a car because everyone has giant trucks and SUVs. For me, I have a Pontiac Sunfire I use as my commuter car, and I do worry that if I get in a wreck, the thing would just crumple like a soda can. So that's my first concern. My next concern is that of the people who have the disposable income to buy an electric car, how many of them will just opt instead to go with the Tesla or a Nissan Leaf? I mean, why get a weird looking tiny car that looks like it accidentally got chopped in half when there are plenty of full-size electric cars available? Now, I guess you would save some money since a Solo is projected to cost under $20,000, but that's not super cheap either. And for only $10,000 more, you can get a real car in the Nissan Leaf, which has more range and faster acceleration and more space in case you need it. And while I was initially impressed with the 64,000 pre-orders for the Solo, I did uncover that the number also includes pre-orders for the Tofino, their full-size electric sports car that doesn't even exist yet, with orders for the Tofino making up 2/3 of the pre-orders, which really just confirms what I just said. People would rather have a cool looking electric car rather than a tiny, weird looking one. The Solo reminds me a lot of the Smart Car, which came out many years ago. And in case you are wondering how the Smart Car is doing, Smart Cars are no longer sold in the US due to lack of demand. In fact, Mercedes only sold 680 smart cars in 2019 in the US. And that was despite Mercedes coming out with electric-only versions of their smart car, which didn't sell any better in the US either. So this is not a good sign for the Solo. While I give management an A on getting to the point where they are starting deliveries this year, I can't help but feel like the product market fit is off. And I think what it boils down to is that people are no longer willing to drive a tiny car just for the sake of helping out the environment. Tesla's cars look super cool and already get better mileage than gas cars, so consumers no longer have to sacrifice looks in order to help the environment, which has gone a long way in helping make electric cars cool, and is one of the main reasons Teslas are so popular in the EV market. But when it comes to the Solo, I just don't know if they're going to be able to sell enough to really grow the company into a billion-dollar business. Okay, next on the list we have RC Moto. RC Moto is very similar to Solo when it comes to their mission and their flagship product, the FUV, also known as the Fun Utility Vehicle. The FUV is a battery electric tri-wheel vehicle that has similar performance to the Solo with a top speed of 75 miles per hour and a range of 102 miles. The FUV also costs the same as the Solo, coming in right under $20,000. But the main difference is that the FUV can be configured for many different uses and can seat up to 2 people. And in case you are wondering, doors are available for the FUV but are optional. The company recently opened a new factory in Eugene, Oregon and passed federal safety tests in September of last year, which means they were able to start delivering their first FUVs late last year. As of December 31st of last year, RC Moto had a total of 4,220 pre-orders for the FUV, which is less than the 23,000 for the Solo. However, they plan to be able to manufacture 12 units per week by the end of quarter 1 this year and 16 units per week by the end of Q2, with a goal of 200 units a week by early 2021. So that is a really good sign that they are already manufacturing and delivering their vehicles, and that is more than can be said for Nikola, which has a market cap 125 times bigger than both of these companies, despite not even having a place to manufacture their products yet. But while there are a lot of similarities between the Solo and the Fun Utility Vehicle, I think RC Moto had a much better strategy with the FUV. For one, it can seat more than one person, which makes sense from a practical standpoint, and I like the marketing for the FUV a lot more. By marketing it as a fun utility vehicle, you are appealing to customers who might not actually need a new car, but have the disposable income to buy one. And by adding the word utility in there, you are helping potential customers justify their purchase by helping them think of your product as useful in more ways than one. For the Solo, based on the marketing, it should only be used for a single person as a commuter car, which really limits its appeal in the marketplace. And like I mentioned earlier, Smart Car only sold 680 units in 2019, and the Solo is even smaller than the Smart Car. So this could be a big problem for Electromechanica and their Solo product. The other thing I really like about RC Moto's strategy is that they have multiple versions of the FUV. In addition to the recreational model, they also have the Deliverator and the Rapid Responder. The Deliverator is modified to be a single-seater and has more storage for things like food or packages. This, I think, will be a huge market in the future, with more and more restaurants buying fleets of small electric cars to deliver food in the future, which should help reduce costs as more people use apps to order food. You can also brand your fleet of Deliverators to raise brand awareness for your restaurant. Now, there is nothing stopping Electromechanica from doing the same thing with their Solo, but as I said, you are kind of limiting yourself by only marketing the Solo as a personal commuter car. And I could be wrong, maybe Electromechanica's plan here is to expand the Solo into more of a multi-use vehicle sometime in the future, but so far, RC Moto has a better strategy by doing this right out of the gate. The other version of the FUV RC Moto has is the Rapid Responder, which actually looks pretty cool, and I could see this being used for security purposes or for medical rapid response, where you might just send out 1 or 2 people to get a feel of the situation at hand. But right now, I do think it is really smart of RC Moto to brand their FUV for multiple purposes, because it will give them a broader appeal in the marketplace. Now, what's very interesting about these two companies is that when we look at their charts, they are very similar. Both companies became publicly listed in September of 2017, and both companies saw their stock prices jump initially before coming back down. But around April of this year, something happened, and both stock prices began to go up big time, with Solo stock advancing 216% since May 1st, and Arcimoto stock jumping 246% over the same time period. So clearly these are two EV stocks that investors are starting to buy into, and I think as a short-term play, buying either of these two stocks is a winning strategy. Now, I am a long-term investor, so if we look at these two stocks from a long-term perspective, it is harder to guess who the winner will be. But I do think Arcimoto has the better strategy and marketing, so I feel like they will do better over the coming years when compared to Electromechanica and the Solo. But from an execution standpoint, I am impressed with both companies, since they have both been able to start manufacturing and delivering their vehicles this year. So at this point, I really do think it comes down to product market fit, because whoever has the better product market fit will be able to sell more vehicles and therefore have higher growth potential. Therefore, for me, I will be buying shares of Arcimoto, but passing on Solo stock. And I won't be buying a large amount either. I'll keep Arcimoto around 0.6% of my portfolio, which is only $600. And again, that is because I am a long-term investor. And I like to pick stocks I feel like are long-term winners. But if you want to go ahead and buy both companies right now in hopes that both of them will go on big price runs, I don't think that is a bad strategy. But at the end of the day, it is your money and it is up to you to make the decision. So if you're interested in discovering more high growth stocks in the EV market, check out this video I did a couple of days ago where I cover Workhorse stock. Workhorse stock is up over 500% already this year, so it could be a great one to add to your portfolio to help you reach your financial goals. Thanks so much for watching this video, guys, and I'll see you in the next one.